What's up, crypto crew? Welcome back to Bitcoin Bulletin, where we break down the biggest moves in the digital asset space, and let me tell you, the pace is absolutely insane right now. We're talking about seismic shifts that could redefine the entire landscape. Get ready, because if you're not plugged into this, you're missing out on the future. First up, the OG itself, Bitcoin, is getting a major brain upgrade. We're diving deep into how a groundbreaking new protocol is transforming meme coin foundations into a smart contract powerhouse, unlocking DeFi, NFTs, and more directly on the Bitcoin base layer. This isn't just an upgrade, it's a revolution, potentially making Bitcoin the ultimate smart asset. Then, we're tracking a massive capital rotation that has the market buzzing. Billions are on the move as a major Bitcoin whale ditches BTC for ETH, and institutional investors are following suit, pouring cash into Ethereum products. Is this a sign of a major ETH surge or a strategic shuffle we all need to understand? We've got the breakdown. Next, we're exploring how Bitcoin is making serious inroads into a traditionally exclusive sector, high-value real estate. We'll uncover how this move signals a new era of institutional adoption and how Bitcoin might be becoming the ultimate macro hedge. Is your next property purchase going to be in BTC? Stick around to find out. And finally, we're asking the big question. Is MicroStrategy's relentless Bitcoin accumulation strategy a high conviction buy signal for institutions worldwide? We're dissecting their bold moves and what it means for the broader market. You do not want to miss these updates. Hit that subscribe button, ring that notification bell, and let's get into it. Bitcoin gets a brain upgrade. This development marks a monumental leap for the Bitcoin blockchain, as a new protocol upgrade has successfully integrated the Ethereum virtual machine, EVM. This is a game changer, allowing for native smart contract functionality directly on Bitcoin's base layer without any need for bridges or intermediaries. Spearheaded by prominent Ordinals developers, this upgrade transforms the BRC-20 token standard, previously known for meme coin speculation, into a Turing-complete system. This essentially means Bitcoin can now support the complex applications and composability that have made Ethereum a powerhouse in decentralized finance, DeFi, NFTs, and synthetic assets. For years, Bitcoin's utility beyond being a store of value has been debated, with its token standards often limited to simpler functions. However, this BRC-2.0 upgrade, completed at block height 912,690, directly addresses this limitation. Developers can now deploy sophisticated smart contracts and decentralized applications, dApps, on Bitcoin, leveraging its renowned security and immutability. This move is expected to attract a new wave of developers and capital that previously gravitated towards Ethereum's programmable infrastructure. The BRC-2.0 standard aims to directly compete with other token frameworks, offering a more robust and versatile alternative. While this integration brings Ethereum-like capabilities to Bitcoin, it's crucial to acknowledge the network's inherent scalability limitations, currently processing around 7 transactions per second. To address this, Layer 2 solutions like Bitcoin Hyper are emerging, aiming to combine the speed of platforms like Solana with Bitcoin's security. These solutions could enable scalable dApps and DeFi protocols that ultimately settle on the Bitcoin mainnet. The potential impact on Bitcoin's utility is enormous, with analysts predicting enhanced roles in real-time staking, lending, and a broader range of DeFi activities. This positions Bitcoin not just as digital gold, but as a foundational asset for a more programmable decentralized economy. This advancement has sparked significant discussion within the community, with many seeing it as a pivotal moment for Bitcoin's evolution into a more functional and versatile blockchain. The ability to natively support smart contracts could unlock immense value and attract a new generation of users and developers. But is this the only major shift happening in the crypto world? We're also tracking a massive capital flow. Get ready for the next big story. Billions on the move, Bitcoin whales flock to Ethereum. In a significant development shaking up the crypto markets, Ethereum is seeing an unprecedented surge in capital inflows, attracting nearly $8 billion in August alone. This massive influx is driven by a dual force: a strategic rotation from major Bitcoin whales and a substantial increase in institutional investment into Ethereum-focused products. As Ethereum trades around the $4,300 mark, this trend signals a potential shift in market sentiment and strategic asset allocation within the digital asset space. A key Bitcoin whale, identified by smart money trackers as an OG investor, has been actively liquidating substantial Bitcoin holdings and reinvesting the proceeds into Ethereum. Over recent days, this single whale has sold approximately $215 million worth of BTC to acquire nearly 49,000 ETH, and in a broader move since August 20th, has offloaded over 35,000 BTC to purchase more than 886,000 ETH, valued at over $4 billion. This activity highlights a growing confidence in Ethereum's potential, even as Bitcoin remains a dominant force. This whale-led rotation mirrors a broader institutional trend. Data from CoinShares reveals that over the past week, Ethereum investment products attracted $1.4 billion in inflows, nearly double the $748 million seen in Bitcoin products. Looking at the entire month of August, institutional investors poured $3.95 billion into ETH products, marking their second-best month on record, while simultaneously withdrawing $301 million from Bitcoin products. This divergence suggests that while institutions still hold Bitcoin, their short to medium-term focus for growth and new capital allocation may be shifting towards Ethereum. Technically, Ethereum is consolidating within a tight range, approaching a crucial apex. A decisive break above its all-time high resistance could signal the start of a new uptrend, while a fall below the $4,100 support level, reinforced by the 50-day simple moving average, could see ETH retrace towards $3,500. Market indicators like the stochastic oscillator and RSI show a neutral momentum, with a slight bearish bias, indicating a period of watchful waiting before the next significant move. The community is abuzz with speculation about the reasons behind this massive rotation. Some analysts believe it reflects a growing conviction in Ethereum's upcoming upgrades and its expanding ecosystem, particularly in decentralized finance and NFTs, making it a more attractive growth asset compared to Bitcoin's primary role as a store of value. Others see it as a cyclical rotation as investors rebalance portfolios. This massive capital shift is certainly making waves, but is Bitcoin also making moves in a completely different, yet equally significant, arena? Prepare for a story about real estate disruption. Bitcoin enters the real estate arena. In a move that could signal a new paradigm for high-value transactions, Bitcoin is increasingly being utilized in the real estate sector, marking a significant step towards institutional adoption and potentially serving as a new form of macro hedge. This trend sees luxury properties and significant real estate deals being conducted using Bitcoin, bypassing traditional financial intermediaries and embracing the decentralized nature of the cryptocurrency. This integration into the real estate market is not merely about convenience. It represents a growing acceptance of Bitcoin as a legitimate medium of exchange for substantial assets. For sellers, accepting Bitcoin can offer benefits such as faster transaction settlements compared to traditional banking systems, reduced fees, and access to a global pool of potential buyers. For buyers, it provides an opportunity to leverage their digital asset holdings for tangible investments, potentially diversifying their portfolios beyond purely digital assets. The adoption of Bitcoin in real estate transactions is also being viewed through the lens of macro hedging. In environments of economic uncertainty or currency devaluation, Bitcoin's fixed supply and decentralized nature are seen by some investors as a hedge against inflation and systemic financial risks. By purchasing tangible assets like real estate with Bitcoin, investors are effectively locking in the value of their digital holdings into a physical asset, potentially preserving wealth against broader economic volatility. This trend is particularly noticeable in the luxury real estate market, where early adopters and cryptocurrency enthusiasts are leading the charge. However, as the infrastructure for crypto-friendly real estate transactions matures, with more real estate agents, developers, and payment processors integrating digital currency options, its accessibility is expected to broaden. This could eventually influence mainstream real estate markets, making Bitcoin a more commonplace payment method for property acquisition. The implications for institutional investors are substantial. The increasing use of Bitcoin in significant transactions like real estate could pave the way for greater institutional involvement, as it demonstrates real-world utility beyond speculative trading. It validates Bitcoin's role as a store of value that can be actively deployed in major economic activities. This growing acceptance could also influence regulatory perspectives and further legitimize digital assets in traditional finance. The community reaction is largely positive, with many viewing this as a crucial step in Bitcoin's journey towards mainstream adoption. It showcases Bitcoin's adaptability and its potential to disrupt established industries by offering efficiency, global reach, and a hedge against traditional financial system risks. So, Bitcoin is getting smarter, attracting big money, and even buying property. But what about the companies that are betting their entire strategy on Bitcoin? We're diving into a major corporate play next. MicroStrategy's Bitcoin bet, a bullish signal for institutions. MicroStrategy, the business intelligence company that has become one of the largest corporate holders of Bitcoin, continues to aggressively accumulate the cryptocurrency, prompting widespread discussion about whether its strategy serves as a high-conviction buy signal for other institutional investors. The company's unwavering commitment to Bitcoin acquisition, even amidst market volatility, positions it as a bellwether for institutional sentiment towards digital assets. Since August 2021, MicroStrategy has consistently expanded its Bitcoin holdings, using various financing methods, including debt offerings and stock sales, to fund its purchases. As of its latest disclosures, the company holds a substantial amount of Bitcoin, acquired at an average price that reflects a long-term bullish outlook. This strategy is driven by CEO Michael Saylor's conviction that Bitcoin is a superior store of value and a potential hedge against inflation, outperforming traditional assets like gold and even inflation-protected securities over certain periods. The company's approach is not without its critics. Some analysts question the aggressive use of debt to finance Bitcoin purchases, citing the inherent volatility of the cryptocurrency. Concerns are often raised about the potential impact on MicroStrategy's financial health should Bitcoin experience a significant downturn. However, MicroStrategy has consistently defended its strategy, emphasizing its long-term perspective and its belief in Bitcoin's fundamental value proposition. What makes MicroStrategy's strategy particularly influential is its visibility and the direct commentary from its leadership. Saylor frequently articulates his bullish thesis on Bitcoin, providing insights into the company's decision-making process. This transparency, coupled with the sheer volume of Bitcoin acquired, makes MicroStrategy's actions a closely watched indicator for how other corporations might view and engage with digital assets. When MicroStrategy announces a new purchase, it often generates significant buzz and can influence market sentiment, with many interpreting it as a validation of Bitcoin's institutional appeal. Furthermore, MicroStrategy's strategy has helped to normalize the idea of corporate Bitcoin treasuries. By demonstrating how a publicly traded company can integrate Bitcoin into its balance sheet and leverage it for growth, MicroStrategy is essentially providing a blueprint for other potential institutional adopters. This is particularly relevant as more companies explore diversifying their reserves and seeking alternative assets that offer potential for uncorrelated returns. The market impact is undeniable. When MicroStrategy buys Bitcoin, it often correlates with short-term price pumps, suggesting that its actions are closely followed and reacted to by traders and investors. While correlation doesn't equal causation, the consistent pattern reinforces the perception of MicroStrategy as a leading indicator for institutional interest in Bitcoin. The community's response is largely one of admiration for MicroStrategy's conviction and leadership in the Bitcoin space. Many see the company as a pioneer, paving the way for broader institutional acceptance and driving the narrative that Bitcoin is a legitimate and valuable asset class. And that's a wrap on our top stories today. From Bitcoin's new smart capabilities to major capital shifts and corporate strategies, the crypto world is moving at lightning speed. And that's a wrap on today's explosive updates. We saw Bitcoin get a major brain upgrade with EVM integration. Billions are moving as whales rotate from BTC to ETH. Bitcoin is entering the high-value real estate game, and MicroStrategy's Bitcoin accumulation is signaling to institutions. Don't miss a beat, hit that like button, subscribe to Bitcoin Bulletin for all your essential crypto news, smash that notification bell so you never miss an update, follow us on all our social channels, and drop a comment below telling us which story you're most excited about. We'll see you next time.